Hey there. So in this video, I'm going to share with you a strategy that I use called naked trading, also known as trading without indicators. Now, it's a very 80-20 way of doing trading. If you know anything about me, I do everything on an 80-20 principle. Minimum effort, maximum reward. You guys probably all know that already, the Pareto principle. So let's dig into this. First step in naked trading is you got to have horizontal levels. The horizontal levels on your charts tell you where to enter and where to exit. Now, to get horizontal levels, there are many different ways to get them. You can go on longer time frames, daily charts. You can seek them out there, or you can just go to previous days, highs and lows. You can seek them out on 60-minute chart, 30-minute charts. You can do the ADM settlement candles and measured moves. There are many different ways to get levels. But whatever it is, you got to believe in your levels, because when it comes to naked trading, you got to wait for the setups at these levels. And that is step 2. Once you got horizontal lines in your chart, make sure you wait till the price action gets to one of these lines. And then there are 3 setups at these lines that I will normally take. If none of these 3 show up, I'll just let it go. It can go anywhere. It can go up, down, left, right. It can stay sideways, but I won't touch it if none of these 3 show up. So I'm always looking for one of these 3. First one, the retest of a breakout. So it hits the level, it breaks out, it comes back to the level and retests that breakout area. And I'll show you some examples soon. The other one, I look for quality double tops or double bottoms. This is a reversal pattern. And again, I'll get into the nuances here in a moment. The other one is a long tail hammer, but not after giant candles. Again, I'm going to show you examples of this. The long tail hammer can be a reversal pattern or a continuation pattern. It could be, it works in both contexts. Again, you're going to see a few examples here in a moment. But basically, horizontal lines, wait for the price action to get there, and then you're looking for particular patterns, candlestick patterns. Personally, me, I do them on 5-minute charts. Again, I'll show you that here in a moment. Also, when you are looking to get into a position at these horizontal lines, you got to make sure that there's plenty of room to the left on your chart. What that tells you is that the price has not been here in quite a long time. Now, that's important because the market does not return to places where it rarely trades. Basically, it's the price is out of where it's comfortable. It's pushed its own comfort zone. It's gone to a place where it's not usually at. Therefore, it doesn't like to stay there. It could reverse from there. It could continue from there. But we know it doesn't like to stay there. So if you have a line, a horizontal line there, and the price gets there and it has not been there in a long time, you got something. And so when you have room to the left and then one of these 3 setups show up, now you're getting interested. So that's the whole setup side of it. The last thing is the entry. When do you enter? What is the trigger? What's the confirmation for you to enter the trade? And that is, for me, waiting for a new high or a new low on a 5-minute candlestick chart. Again, I'm going to show you the examples now. And this is really important to have confirmation of the setup. So there's one thing is setup, the other thing is confirmation. And in having a confirmation before entering, you actually avoid many losers. You have a much higher win rate in doing this. So let's dig in. Here's one example. Again, you can see horizontal lines. I got these lines off of the daily chart. You can see Meta broke right through these lines. And you can see right here, it goes back, right? It breaks through this one here, about 627. It goes back to the level, right? It turns it into resistance. You can see it's resistance there. Sure enough, it becomes bearish right about there as well, right? You can see it's rejecting the level. So where do you enter? You're seeing this. It's gone through the level. This is the retest, and off it goes. But where do you enter? How do you enter? For me, this candle is not bearish enough. There's a wick here on the downside. The buyers are still in the market. The next one, again, pushes up and again rejects the area. And now this one's very bearish because the wick here on the downside is very minimal. It basically closes at its low. So at the end of this candle, the way I'm seeing it is that this retest of a breakout setup is complete. Now, where do you enter? You still don't enter when this candle closes. You wait for the next one. Let it open. You can see it pushed up a little. Comes down when it makes a new 5-minute low. So as soon as it breaks the low of the previous candle, that is the ideal entry. Somewhere right there, you can have your exit or your stop right above the entry candle. These are 5-minute charts, so it's pretty big, pretty slow. And then the target's down at the next levels. That's about it. And you can see that's me getting in and exiting down in this area at the next level. So that's a very simple one. This is an excellent pattern. As you can see, when it shows up like this, it works. Also, room to the left, you don't see it on this chart, but it hasn't been in the 627 area in quite a while. That's something definitely to look for. That just tells you it's not likely to get stuck there like it was before. So there you go. Breakout, retest, bearish candle, new 5-minute low is your entry, hold for the target. You can see there, one entry, one exit, made for a decent day. Here's another example. Look at these levels, horizontal lines, right, on the charts. And Apple made its way up to the level, and sure enough, it did a nice double top. This is the other setup I was telling you about, the second one. So you have one top, and you have the second top, which is lower. And that's really important. That's telling you that the bears are able to push the price down. They're starting to take over the price. The bulls are losing their control. They had control here. Now they're losing it. And it's happening at an interesting area, at a level on the chart, right? It's a zone. It's not a precise point. It's a zone. And also, it has not been here in a long time. You can't even see it here in this whole pre-market area. It just was never here. So everything is aligned. So how do you get into this position? How do you trade this? So when you see the first top around about here, you'll probably say, oh, yeah, that looks like a top, and it pushes down. You don't touch it. Don't touch it here. You're going to get chopped up and messed up. Let it go back up and make a second top. By the time it closes this red candle, you might be thinking, hey, now this looks like a double top. Now you're waiting for genuine bearish activity. This red candle here, this is not genuinely bearish. There's a wick over here on the downside. Again, the bulls are still in the game a little bit. You don't want to risk it. The next one, this is interesting. You can see this has a tail on the upside. It does have a small little wick on the downside. The body is very tiny. Now, this, to my eyes, is very bearish. So now I'm thinking, okay, the double top is complete because you have a second top that's lower than the first. It's at a level. It hasn't been here in a long time. It's got room to the left. And it's printed a bearish candle. Now you don't enter. You still wait for that confirmation, right? You want winning trades. You want to have a high win rate. So the new low, as soon as this candle opens, you wait for the new low. That's your entry. Your exit can be right above it. You can be conservative, put it above the top or even further out, as you please. My stops typically are either above the 5-minute candle or even the most recent top, and you're going for the next level down, the next area. You can see I got 2 levels in this zone, so this is really like a zone. These levels aren't precise things. You got to be very careful about that. That's important. And so you can see there's the entry with the confirmation of the low. Again, I'm buying put options here, which is effectively these contracts go up in price as the equity or the underlying goes down. So that's the entry, just holding for the target. There it is. That's the target getting out. And that makes for a decent trade. So fairly straightforward, fairly simple. Again, 80-20, not too complicated, but there are some nuances that you got to get right. Here we go. Here's the other setup that I was telling you about. You can see you got levels in this area, levels in this area, got one up there. So you can see these are zones, right? Now, Apple in this zone was very interesting. It made this hammer in the second candle. This is that long tail hammer that I was telling you about. But you don't enter this one on the next candle just taking a long on the new 5-minute high, because this hammer, this bullish hammer, happened right after a giant bearish candle. So it's not in the right context. Even though it's got room to the left, it hasn't been here in a while, but still it's happening in the wrong context. This is no good. You don't want to take these hammers immediately after a bearish activity, just like this having a really big giant candle. So you're not touching it. Then it makes another hammer. Now this one's interesting. This one also, now it went deeper. It's got room to the left, hasn't been here in a long time. And it's happening after a small, tiny candle. So you can see it was very bearish. Then you can see the bulls kind of getting into the market. You can see indecision. Then you can see this big hammer. This is extremely bullish. So now the idea is to enter on a new 5-minute high. Now it takes 2 candles. And then the third one is where it makes the 5-minute high above the hammer. That's the entry. That new high, that's the confirmation. That's the trigger for the entry. By the time it closes this hammer, the setup is complete. Again, the setup is long tail hammer. It has room to the left, and it's doing it at a zone and one of the levels on the charts. So the setup is complete. You don't enter until you get your entry trigger, which is a new 5-minute high. You get it. You can keep your stop right below the level, and you can just run the thing up to the next level. The easy ways to do it is just run it to the next levels. And you can see that's me. I got a premature entry at first, so stopped out very quickly. Got in too early, as in down here someplace, and you can see it didn't want to go right. So you stop out quickly when you're making mistakes. And the new 5-minute high, that's the entry. And you can see it never, ever tested my entry. It just went. And that's the entry. Hold it for a target. That's the exit. Makes for a good day. So there you go. That's the setup. Naked trading. Again, the setup is a long tail hammer at a zone with room to the left. The entry for that setup is the new 5-minute high. And you can do this in reverse, of course. This is a bullish one. The same thing happens in reverse. Just flip your screen upside down if you like, whatever. So what we just talked about was all on trade management. On setup and how to get into these positions. Now let's talk a little bit about trade management. There's 2 important things basically in trade management. One is risk, the other is reward, right? That's it. There's nothing to it. So when you put on the trade, the first thing you want to do is minimize the risk. You got to stop in place when you put on the trade, but you really want to be able to move that stop closer to your entry and ideally to a break-even position. And then the trade becomes free, right? Because if it comes and hits your stop, it's break-even. You don't lose anything. So that's really important. And then the other side of it is the reward side. Hold it for a target. So let's talk first about de-risking it with a trailing stop. So in this trade, well, let's look at this because I'm trading options, but realistically, I'm just watching this chart and making decisions based on the underlying. So you get in at the top of this candle someplace. Your exit is down there. This candle was, just didn't really go anywhere up and down, just open and close there. And the next one, this big one, look at that. That's huge. Now it's already departed. By the time this candle closes, the price has departed the area where you entered. Think about it this way. If the price from this close comes back down towards where you entered, well, now you're not thinking this is bullish, right? Now you're thinking, wait a sec, this has got trouble. It might even be the previous high of day. It could not go. It'll just go back. You don't want to be a part of this. So, but once this closes, that's when I would take my exit, my stop from below the entry candle and bring it up to maybe halfway of that entry candle or even just below the big bullish candle, right below it, which for me in this case puts it right about at break even. And that's it. So now what you've done is you've de-risked the trade by going with a trailing stop idea. The trailing stop is nothing more than following the price action. This price action has departed the area, so I'm just following it through. Now you can continue with the trailing stop. Every time you get a wick, you can put it below that. Every time you get a pullback and you get the pullback is complete, so it pushes back up, you can put your exit below that, and you can do it all the way. On this particular trade, I actually did that. That's what had me hold it all the way. But the most important thing about the trailing stop is to de-risk your trade up front as quickly as you can. So moving your exit or your stop up closer to your entry point is very critical. And beyond that, you can continue trailing it, or the other way, the other side of it, the reward side is just exit at levels. So you have this area here for an exit, and you have this one here for an exit. That's the trade management side of it. Here we go. As I was saying, levels. You saw this one earlier with the double top. Again, double tops, it can happen the other way too, right? Flip your screen upside down, it's a double bottom. So it works either way. And so you get the entry, and as we discussed, trailing stop. Let's say, where would you enter? Was here. Stop. Exit is right above it. Big bullish candle. So you might want to put your exit just halfway in that candle. Again, a big bullish candle. You definitely want to follow this price down, right? But let's look at the reward side. You've already understood how to de-risk it. The reward side is nothing more than wait for your target. Now, this is important. You see the entry and the exit. These are 5-minute candles. This thing takes like 30 minutes to go. You really got to hold it. What's really important, if you really want to make big money here, what's important to understand is good things take time. You're not going to get a 10-hour trade in 3 minutes. Most of my trades are longer than 30 minutes, most of them. A lot of them are 2 or 3 hours long. And so that's how I do trade management. I first de-risk it by trailing the price as it departs your entry area. And then you can continue trailing it or just let it be, put an order at your target area, and that's it. You're all out of it. Here we go. Here's another one, another example. And you can see Meta here, got the horizontal line. It came down to the level. It got stuck at the level, but then look, it pulled up, did a reverse hammer, right? It hasn't been here in a long time. You see what the reverse hammer is, about 565. And that reverse hammer is super bearish. You can enter short there. It's about me getting the entry. I think I entered just a little below the level and just holding the price, or sorry, holding the position for the next level down, in and out, right? And then it wanted to continue from there, so I'm adding back in. I didn't get all of it out at the first level. I got most of it, like 90% of the position, and add some more back in as it wants to depart that area and go to the next level, adding more in and going to the next level. So in this case, again, just using horizontal levels. Horizontal levels tell you where to enter. So you're looking for these patterns at entry. So this is a continuation pattern. It's not really a breakout and a retest like you saw earlier. This one is that long tail hammer that we saw previously, but in a continuation context, right? It gets stuck. It doesn't want to do anything for hours. And then it pulls up and does this hammer, and it hasn't been up here in a while. This is really interesting. This is telling you the bears are getting in charge, taking charge of the price. Then you 5-minute lows your entry and you hold it for the next target. And if it wants to continue, you can add some more, go for the next target, and it makes for a decent day. So that's how you manage these trades. So lastly on this, the bigger picture of trading naked, you got to understand that trading naked, you have no other indicators. There's nothing on your charts. It's just horizontal lines, however you like to find them, and candlesticks. Personally, I use 5-minute candlesticks. So you need really great candlestick patterns, as in let them be near perfect. You have nothing else to back you up. No level 2 or the tape or moving averages or volume. I mean, nothing. So I'm really waiting for outstanding candlestick patterns. Until I don't get it, I won't touch it. And of course, another key point, make sure you wait for your levels. Don't just trade excellent candlestick patterns in the middle of the chart. It's got to be at a level, excellent candlestick patterns. So now you put that together, you're going to realize that it's going to take a lot of patience. It takes a while for the price to get to the level. It takes a while for the price to set up an excellent pattern. And when you enter, you're trying to hold for a big move, right, for the next level. So it takes a while to get your reward. So again, patience is the name of the game here. Like I said earlier, good things take time. You're not going to make big money with short moves. You know, it doesn't really work that way. You want to make money on the move, not on the size of the position. So plan it that way. Sort out your temperament so you can use this strategy. And you can see it's incredibly rewarding. Lastly, just want to leave it with you. When you're picking your levels, make sure you trust them. Like I said earlier, there are many ways to pick levels on stock charts. Find a way that makes sense to you. Use levels that you believe in. You know, you want to understand why they're on the chart. Like yesterday's high, yesterday's low. Okay, you know why they're there. It was the absolute high was resistance yesterday. Okay, it makes sense to you. Okay, fine, use that. There's no right and wrong way about levels. It's a matter of you must have confidence in your levels, because when the time comes, you're going to put risk on against that level. So you better trust it. If you don't trust it, what's going to happen is you're going to mismanage the trade after you put the risk on. You're going to hold past your stop. You're going to exit prematurely, and you're going to hold silly stuff. You don't want that. So very simple, naked trading. Hope this video helps, and I'll talk to you all soon. Take care.